What's going on YouTube, TikTok? I'm starting a new series and it's going to be more about stocks. Yes, I just finished up building my dividend portfolio and I want to give videos about it. But at the end of the day, I'll probably only do that once a month just to give a recap and what's in the portfolio. But instead of worrying about all that, what I'm gonna do now is start making videos on how to build a portfolio, what's a diverse portfolio, and talk about stocks for investment so you can get a better idea. And this is just my personal opinion and how I build it and through the years of learning. So today we're going to talk about diversifying portfolio of individual stock. Now, I do not recommend buying stocks if you haven't built your retirement account. This is something separate. It's in a brokerage account for me. And this is just for the extra money I have every month so that I have something to do with it and it just doesn't sit in the bank. So this is for my diversification. This isn't not my 401k. This isn't my IRA. This is a straight dividend portfolio. I do have all the other accounts, and this is so I can also learn, and hopefully you learn with me. So for a diversified portfolio,
when we talk about diversified portfolios, S&P 500 is a single holding inside of a single asset class that represents a total portfolio. So is it a good option for that asset class exposure? Yes, we love that. Would we stop there in terms of diversifying your assets once you've reached the point that diversification makes sense? Probably not.
Dividend stock, it usually ranges between 20 to 30 stocks, different sector, and often recommended by expert. However, the idea depending on the investment strategy, risk tolerance, and research time. So if you didn't know, I made a dividend portfolio and it took me about a year and a half to 2 years to build up this portfolio and research companies to build it. So you need to understand that the right number stock of holding primarily about balance, diversify, and manageability. Yes, I can have a stock portfolio of 60, 80, 100, but personally, I think that's too many. And a good strategy with individual stock will have 20 to 60 of stocks. Now, this depends on how much time you have to monitor and look at it. I picked 24 just because it's a good number for me. It gives me time to look at it, analyze each stock every year, and gives me a good chance to understand them. Now, what is the best strategy for diversification? So, best for investors seeking a balance consistent of income and growth potential. Now, here's the thing. My portfolio is built off growth potential and diversification. It wasn't about the consistent income or a high income. So most of my picks were not 4%, 5%. Most of my picks were actually 1 or 2%. And if you see the portfolio, the balance of dividend yield is about 1.2, 1.4%. So depending on it, what stocks go up, so it doesn't have a high percentage. Now, let's talk about some of the key features of holding these stocks. So holding 20 to 30 stocks across various sectors significantly reduce your risk. If you invest in one or two companies and they cut the dividend, it's going to greatly impact you. And this is one reason why I didn't get 60, 70, 80 of them, because I would have to keep up with all their dividend paying and make sure they keep paying.
If you put all your eggs in one basket, sure, you can carry everything at once, but you can also lose everything at once. So that's why you take your eggs and split them between several baskets, so even though some break, others can stay safe. This is how you should treat your money. Instead of putting everything into one investment, invest between different asset classes, industries, and geographies, and even
20, 30 stocks. It's easier for me. So I think the perfect number is based on how much time you have. But 30 is a pretty good number. It's right in the middle. And if you build up one, And just make sure you understand it's based off how much time, but I think 30 is a good one. Now, if you didn't know this, research showed that holding 25 stocks can reduce diversification risk about 80%. So that's why I picked 24, 25, because it reduced the risk greatly. 80% is a good number for me. Now, while 60 stocks will reduce it even further. So, based off how diverse you want to be. I don't want to be in every single market, but I want to be diversified. So, this is where you need to understand. Now, another key fact is spreading investment across different industries such as utility, healthcare, consumer staple, financial, help smooth out returns for volatile market. So you have to make sure you diversify my portfolio or your portfolio if you want a good dividend portfolio. Now, I did see people buy ETFs for dividend portfolio, and there's nothing wrong with that. That's the great way to do it if you don't have time. Now, I did this because I didn't want to pay a management fee, which at the end of the day is not that much, but I figured I could save some money and diversify it myself. Now, what strategy is best for you? Now, there's a strategy that's high yield stock pick between 5 to 10 stock. Now, this is best for experienced investor who are comfortable with high risk and can perform detailed company analysis. It's not for your everyday day trader. It's not for your high dividend return. You need to have experience if you're only going to have 5 or 10.
Diversification is, as practiced generally, makes very little sense for anyone that knows what they're doing. Diversification is a protection against ignorance. I mean, if you want to make sure that nothing bad happens to you relative to the market, you own everything. There's nothing wrong with that. I mean, that is a perfectly sound approach for somebody who does not feel they know how to analyze businesses.
And this is why I didn't do 5 or 10, because you have to do detailed company analysis, because that's the thing. You need to go further in. You need to have a better understanding with it. And I just did the bare basic and look at if I want to own the company, it pays a dividend, it has a good growth potential, and it's financially secure. That's the only thing I looked at for my dividend portfolio. So I didn't do the detailed one. Now, the key feature to this high yield stock picking is this approach focuses on small number stock with unusually high dividend yield, like this one on the screen and this one. But you need to understand that diversified individual stock, the 20 to 60 is the one strategy I pick because it's diversified and it's focused on performance. The high yield stock pick dividend carries higher risk than that other one, as high yield can sometimes significant trouble company or instability on payout. So you have to understand that. Now, high yield often requires more frequent monitoring to ensure a dividend is safe, because at the end of the day, they could be paying high dividend, but you're losing value of the stock. And this is something you're not going to know, and you have to do constantly monitoring. Now, I did tell you, I picked diversification, which is 20 to 60 stock. And a high yield strategy is 5 to 10 stock with a very high yield with a higher risk on it, which requires you to monitor it more. And now, the last strategy I'm going to talk about is dividend-focused ETF funds. Now, this is the best one for everyone. It's best for the beginner or the passive investor who wants instant diversification with very little interaction. Now, I told you mine, but this strategy is the best one, because the key features to this is instead of picking individual stock, you can invest in exchange trade fund or ETF that hold dozen or even 100 of dividend stocks. And you don't have to monitor it, someone else monitor it. With 1 or 2 transactions, you can expose to broad portfolio is the key feature of this one. And It's the popular low-cost dividend ETF, including Vanguard Dividend, which is this one. The VIG is this one, or SCHD is this one, and SDY. So those are the strategies you can use for dividend investment. Now, there is other ones you can pick in between, but remember, these are the 3 strategies you can use. It's dividend diversification stock, individual stock, high yield stock picking, and dividend focused ETF 1 to 5 funds. So which one should you do? Well, if you're a beginner and you want passive investment, do the last one where you just pick ETFs. That's the best one for majority of investors, and I recommend that one. Now, if you have more time on your hand and want to avoid fees and funds, I recommend you to do that diversification individual stock, which is 20-60%. That's focused on consistent growth and income potential. So, and if you're really risky and you want the best returns, I don't recommend it, but it's the high yield stock picking. Now, let's talk about the importance of diversification. Now, simply owning high number stock is not enough to protect you over your portfolio. Proper diversification means spreading your investment across multiple dimensions, meaning across different sectors, by yield, by geographic. So you need to learn, if you're going to diversify your portfolio and you don't know much about it, the first thing is it has to be a cross sector. A cross sector means there's 11 GICS sectors to avoid overexposure to one sector. Now, it's recommended not to do more than 25% of your portfolio in one sector, and I recommend the same thing. I'm pretty close of 25% in technology, or I might be at 30%, but that's because it grew so much. But I consistently invest in other markets so I can have it balance out. And by yield, that just means balancing your higher yield stock, which can be riskier, with lower yield dividend growth stock. So you can diversify. You don't want it all at 5%, 7%. You want some 1%. You want some 3%. And that's just to diversify. And depending on your strategy, you might want to do international dividend stocks or ETF that can provide a broader market. So, and the last thing I got to tell you is next step for building a dividend portfolio. Once you decide your approach, focus on these criteria for long-term success. Analyzing company fundamental. And this is what I did. For individual stock, look for companies with strong and predictable cash flow, manageable debt, history of increasing dividend. And those 3 are very important for a fundamental of a company. And the next thing you need to do whenever you're building your portfolio is understand dividend safety. Yes, it sounds so good to go and buy a high dividend yield, but you also have to understand too high a dividend yield can read red flags. Look for companies that are safe or very safe for dividend safety score, and those have long-term annual dividend history, and that will make sure your portfolio is well diverse and safe. And lastly, consider your goals. What is the purpose of your dividend portfolio should guide your decision? If you're seeking immediate income, you might have to do the 1 to 5 stocks to get a higher dividend to higher payout. But if you're seeking for long-term strategy growth, that's where you diversify, and this is where you have to decide. Now, those are the different strategies you can do if you want to build a portfolio and a dividend. So, subscribe to my video, and stay tuned for more videos about stocks.